Daily spreadsheet, just going over the process and how this is done. What I have here is a spreadsheet in front of me with 5,592 stickers that was returned from Alphaquery. And members, you have access to this as part of your membership. I would highly recommend utilizing it. We have screeners. This table's easily built in. All you got to do is load it and click run. Now we're going to remove a lot of this data because, again, 5,000 something tickers is a lot to have. So we're going to organize the data in order of RSI by smallest to largest. And we're going to get rid of everything in between around 27 and do 27, between 27 and 65. We're going to delete everything in between those numbers. That way every RSI on our spreadsheet is either going to be overbought or oversold, meaning over 70, or in this case 65, since I like to leave a little wiggle room to play off the last little uptrend until it is oversold. Or it's going to be overbought, or below 30. So once we're done highlighting all these, we're going to remove the data sets, and we're going to clean this spreadsheet up to reduce the amount of tickers on here to give us optimal results. We're going to go ahead and remove all of these from about right here. Remove the white space in between. And these are our puts. Now we're going to do two more things. We're going to get rid of healthcare, and we're going to get rid of ETFs. So we're going to get rid of, oh, that was the industry. Let's go to the sector. We're going to get rid of healthcare, and we're going to get rid of the ETF sector, which is going to show up blank in this table. So healthcare right here. Remove that. And delete the white space in between, and then remove the ETFs, which is going to be at the very bottom. Right here. Get rid of those. And remove that. So now we have a much smaller spreadsheet to look at. Now it's still, pretty big. What we're going to do, we're going to organize this last earnings report date. Oh, wrong way. From the most recent earnings to the furthest scheduled away. So we're going to look at everything from 5/23 and after. So we're going to get rid of all of this now. And we're going to keep the blanks just in case. And now we have a very nice spreadsheet. So these will be organized into organized by puts and calls by doing RSI one last time. Now we can just highlight this. Everything above that 65 mark. So right here is going to be our puts, and right here is going to be our calls. Now when I say it's going to be our puts, that means put potential. You still need to go through and make sure that all of this meets criteria. However, these are going to be the optimal criteria to look for right off the bat. So here we have our puts. Here we have our calls, and this is based off the RSI. And then we just start plugging in tickers. So let's go ahead and put in SATL. SATL. Okay, so we got a broken RSI, obviously. We got two gaps, corridor looking ordeal here. So we're going to go ahead and chart these. This is going to be our resistance right there. And we're going to have an additional layer of resistance right here inside the corridor. Now, what we can do is we can go down further in time to find support. Now, support, we have support right here. Anything below the current price from a gap is going to be your support. So right there, support, and right here, support. And then we got another closer resistance that we couldn't see on the daily a second ago, which is why you want to go down in time frame. On the 5 minute, we have even more support. I'll put 1 here. I'll just make it very big. That way, saves us some time. So that one, there's 2 gaps in one. Then we have an additional layer of resistance right there. Lastly, go to the 1 minute, and you get an even tighter window. So we got resistance here. We got resistance here. And what I'm doing is I'm marking the bottoms of all down gaps and the tops of all up gaps, respectively. So now, there's the full picture. We could go further back and determine more gaps further out, like if we wanted more resistance lines up above to give us more trajectory come trading time. We can do that very easily. Make sure if you do this, you lock your lines in place so you don't actually move them by accident. Will throw off your whole setup. Okay, so once I'm done charting these last two, I'm going to zoom back out to the daily, and we're going to look at the picture, comparatively speaking to the RSI. All right, so that's where we are now. Green is support, red's resistance. So clearly the RSI is oversold. Let's go on the 1 hour actually. So RSI on the 1 hour is not oversold. So oversold looks like to be about right there where that gap would finish. But on the daily chart, let's look at the options chain real quick. $4.9. Okay, OI. Now, open interest on the call side is going to be your resistance. It looks like we don't have resistance up until, we do have some at 5 with virtually no support. And we have some at 7.5. However, the most open interest on the call side is at $10, which means that's where the most resistance is going to be. As far as volume, there was no volume today. Let's look further down. Okay, look, right here. You had 71 calls for volume at $10. This is where I would play this particular ticker. Is a $10 call for August 19th, 2022. Because again, that's the only, other than this one here, all the volume you saw, we had one in the money today at 2.5 for January 2023, and you had 10 for $10 at January 2023, but the most by far was at $10 for August 22nd, 2019. Follow the money. That's exactly where I get this contract, not financial advice. That's how you go about getting plays from these playbooks or these spreadsheets. Very simple. Now let's look at a put example. Let's go with VMW. I'm going to do it the same way. We're already wedged in between two corridors. This is our bottom line here. Resistance. Top of the bottom gap here is our support. That's our daily outlook, just from the daily. Now we go down to the hour. Is that the same gap? 109.10? Nope. It's different. So this one will have to go here. Change it to green, lock it up. And we got one more right there. And look, there's resistance right there above the price. Perfect. Lock that up. Red. Okay. Now, let's go back. We're on the hour. Let's go 30 minute. Looking good. All right. Let's keep going backwards. Look at that beautiful channel it just stays in. Down, 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 bounce, bounce. Okay, let's go another 5 minute. Boom. More lines to chart. Very good. This is going to be support right here. Okay, now we got one right here. It's going to be support. It's already been tested once, it looks like. We zoom in real quick. Tested right there. Perfect. Let's keep going. Resistance tested perfectly there. And right there. And right there. Oh, got above it there. But it's after hours. Doesn't count. Ooh, there's another one right there. And we got support right there. So now let's zoom out again, take a look at the daily. So clearly right here is the oversold point, which it hit right there. Now it's back in range after a red day today. It's slightly under overbought. This one is 68.06. So the question remains, is it resetting to push to this line? I would imagine so. Let's look at the options chain. It tells the story. Okay, so volume. Where are we at for volume today? For the 16th. Comparatively speaking to open interest. We have, looks like, support at 130. But again, not a lot of volume here. This is 4 days away. This is a weekly expiration. Let's go to the 11th and see what that story tells us. Volume and the money calls there, and the money calls there. 106. I think that we could see this go up a little bit more before it's done. So despite it showing up on the put side, this is why we analyze every play and use the logic, because sometimes, despite it It's showing up on a put screener. It could be a call play just for the next few days. Now, look at the open interest. You do have support at 120. It's a little bit at 125. Let's go ahead and look at our max pain command. Let's go ahead and do MP VMW 2022-06117. We're going to go ahead and call OI as well. Max pain is 120. Where's the price at now? 130. Okay, let's do OI VMW. This brings back consolidated OI. This is our picture here. So whenever you see this outlook on a open interest picture, 2022-6-10, 2006 open interest total, OIC percent, that is the open interest call percent, which should be considered resistance. OIP percent is support. Volume, however, that's where it gets tricky because volume outweighs puts as far as calls versus puts, but OI outweighs puts as far as OI calls versus puts. So while the OI says bearish, the volume says bullish. Now, however, there's not enough volume to justify a bullish sentiment, in my opinion. So this could be tricky. Next week is quad witching week. This is the most volume in the chain. Again, you got to think about it like from a ratio standpoint. Let's go ahead and call max pain for this week just to see. 610, 116, even lower. Wow, that may adjust later in the week. So again, you can't ever go off max pain in and of itself. It's not enough metric to justify making decisions from in and of itself. Now what we can do is exclamation point OI VMW 2022-06110. Similar picture to what I sent before, except this time it's broken down by strike price so we can individually analyze support and resistance based on strike. So now that it's at 130, and this is in order from most OI to least OI, 130 is the top OI position. 91% is going to be your calls, meaning resistance. 120 still have resistance more than support. 116 more resistance than support. So where's the support? Well, I see support at $128 right here. Now, from a ratio standpoint, not a lot of open interest, 32, compared to the 404 top position. You have support at 119. You have support at 124. You have support at 128. Again, but not much. But the most relevant, I would say, these top five. Resistance, 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 support. 95 with zero volume. You had 33 call volume today with, again, massive resistance at 135. So I think the play here for VMW is to go short-term calls into mid-term puts. This is my opinion, though, based on the analysis we just completed. But anyways, that's the video for you. This is what real knowledge and value looks like. I'm trying to help you. And again, this helps a lot of members in our group. And it's a very good way to go about finding play opportunities that tend to work out very well. 85% chance. So anyways, y'all have a good one.